All right, well, welcome to the April edition of the Beyond Wealth Advisors Economic Update. I'm John Cleaver, Financial Advisor, and joining me today is Grant Gehring. Welcome, Grant.
Thank you, John. Glad to be here.
Absolutely. We're excited to have you. Grant is our Director of Product Research and Portfolio Strategist at Beyond Wealth. And you know, Grant, a lot's happened since our last update. On April 2nd, the Trump administration announced major new tariffs targeting most of the U.S. trading partners. And with these changes, the U.S. weighted average tariff rate is now the highest level in over a century. So not surprisingly, the U.S. equity markets have sold off. Many of you are aware of that. And certainly concerns about a recession continue to grow. So with this uncertainty, there's still questions. What's going to happen? How long will they stay in place? Are companies going to retaliate? And is negotiations even possible? So Grant, what does this mean for the U.S. economy?
Well, here's a simple rule of thumb. For every 1% increase in the average tariff rate, U.S. economic growth slows by 0.1%,
okay,
and consumer inflation increases by 0.1%, all else being equal. Of course, that's the technical answer. We've never seen such a steep and sharp tariff spike in U.S. history, so it's safe to say we're in uncharted territory.
Yeah, I would say so.
However, if these tariffs do stick, we can draw a few conclusions.
Okay.
The U.S. economy outlook will be worse than previously expected. Economic slowdown or even the risk of recession will climb.
Okay.
And it could lead to higher inflation. That said, there's a few bright spots that we still have.
Let's hear about those.
Yeah, the labor market is strong with solid job growth in the private sector. Consumers are still holding up relatively well, at least for now. And the AI data center boom continues to drive infrastructure in industry and energy demand. So we have those things going for us.
Right. Yeah, there's definitely some positives out there. Well, one thing we do know is that uncertainty equals volatility. This isn't a new theme. We've been talking about this. We've certainly seen plenty of volatility lately. But what makes this a great time to pause and certainly revisit just some basic investing 101. The old adage that time in the market, not timing in the market, is what matters. So we're not waiting for the right moment because that could be really missing critical and performance opportunities. We know pullbacks are going to happen, so staying committed is the key long term. Certainly avoid panic selling. Emotions run hot, but it shouldn't run our decision making. So a long-term decision is what's important when the markets are choppy.
Right.
So one economist put it as, look, the history of the market is always overreacting. So Grant, we know that missing the top performing days can be problematic. Explain that a little bit more.
That's right. So John, pullbacks are just part of the investing. If you're not in the market, sure, you avoid the volatility, but you also miss the upside. So let's take this example. Over the last 20 years, the S&P 500 returned around 9.3% annually. But if you missed the 10 best days, that return drops to 6%.
Wow.
And if you miss the 50 best days, it drops to 2.9%. Here's the kicker. 24 of the 25 best days happened within 1 month of the worst days.
Wow, Grant, that's such a great reminder. And of course, in times of turmoil, sometimes opportunity knocks, right? So market pullbacks create chances to invest while maybe others are seeking to exit. We certainly see that. And right now, investor sentiment has maybe turned a little bit bearish, a little bit skittish. But historically, those periods of more bearish sentiment have led to really outsized performance. All the more reason to stay the course in the midst of market chaos, of course. So let's not forget about the power of diversification. Grant, you spend many of your days building out our well-diversified portfolios, and in those strategies, intentionally leveraging both stocks, bonds, international, U.S. stocks, growth stocks versus value stocks. So we know that being diversified really spreads out the risk and broadens opportunities. But can you expand on how our process benefits the investor during these volatile times?
Yes, John. Stocks may have greater long-term growth potential, but bonds play a key role too.
Sure.
They help hedge against volatility, preserve wealth, generate income. And even though yields have ticked down a little bit, they're still at levels we haven't seen in 15 years. I'm also glad you mentioned international exposure. We would be remiss if we didn't look for the best opportunities around the globe to strengthen overall portfolios.
Right.
And the infusion of tariffs only magnifies the importance of looking outside the U.S. Worried about a recession?
That's the key word.
There you go. Diversified portfolios with fixed income have historically held up better in downturns.
Yeah, and that's always been our approach, is to stay diversified. So,
Absolutely.
Hey, Grant, appreciate that. So, we're so blessed to have you on our team, and we appreciate all that you do, and
Happy to
especially coming up to be with us today. So, one last thought. If this market has you maybe staying up at night or difficult sleeping, it may be time to revisit your investment objective. That's really our primary objective. Doesn't mean that you need to sell everything. May just need to adjust your risk level. And if you don't have a plan yet, we certainly encourage you to have a plan, one that you feel comfortable with.
Right.
And, Grant, we've been doing this for a while now, and as always, we remind our clients to communicate with their financial advisor. Really, don't wait for these times to come about to then make a decision. Be prepared in advance so that when it does come, we can be very opportunistic.
Excellent.
So with that, we want to thank you for tuning in this month. Obviously, there is a lot going on. We're acutely aware of what is going on in the marketplace and in the economy, and we look forward to serving you in the coming weeks and days.